also do the recording just now as well. So, all right, let's just do a bit of a sound check now. Hope you guys can hear me loud and clear. And with that, my screen is up for sharing. So I guess you guys can see my screen, my presentation slide right there. I'll just move up to the first part there that mentions the title Scientific FX Certification Series. It's the VIT Gold Trader, but it's precious metal with more focus on gold, gold and silver mainly, but I'm going to be talking a lot about gold with some expectations on gold's prices and things like that. But we will be on part one, so it's more on the history, a couple of things to share so that can actually tie in with the other parts. Okay, so I would like that to bridge the gap between theory or history eventually to what's going on now and what we could see as an opportunity for us gold traders. Okay, so yeah, it's going to be an interesting one, and I would encourage you guys to be interactive with me, ask questions, you know, challenge whatever you see as worth challenging as well, and that would be nice, you know, to have a constructive sort of conversation over a very hot topic now about whether or not gold is good for us at this moment of time, to still consider it, to invest, to trade it, and things like that. Okay, so let's see more. Yeah, good. So you guys can hear me, you can see me, see my screen as well. Let's see, I think it's about time for us to get going on this. Okay, so let's just start. Okay, let me just widen the screen. Give me a second. All right, there you go. Okay, guys. I would like to welcome you guys. A very good evening. First and foremost, a big thank you for you guys spending your evening with me today on this Scientific FX Certification Series. Now, it'll be a focus, as I've mentioned, on gold. Today is the 1st of December 2016. It's about time. I've planned this quite some time ago, a couple of months back, but then thought, you know, just to push it forward a little bit, right after Trump's winning his own Trump card. So that's basically the reason for a bit of a delay in that. But what happens here is this certification program will be made out of 4 parts. So today is the first part, and we're going to talk about gold's yesteryear or its history in a bit, so that we can then chunk it down and look at how much could it actually bridge the gap between what had happened with what's happening now, so that we get, you know, a bit of an idea. But the most important thing of all is the ultimate goal is to know by part 3 and part 4, you know, how worth is it, or by when should we actually, if at all it's worth for us to still look into gold as an ideal investment, then to trade it on an Forex platform, on Orbex platform as well, then would it be a good time or not for that? So we're going through various areas in that. Okay, so this is part 1. Once you've completed the part 4, you'll be given a 20 quiz question, and the passing mark for that is 80%. And once you have passed that, you're eligible to for a certificate to be sent to you right after opening a live account with Orbex. Okay, so that's sort of the policy procedure with the whole thing. And I wish you guys to enjoy this session and welcome questions. And just before we start, a bit of a risk disclaimer here, and it's pretty standard, but I'll start with the second paragraph here. With any opinions, news, research, analysis, prices or other information contained on this presentation and uttered by myself, it's provided as general market commentary, okay, and does not constitute of investment advice at all. All right, and me, Kenny Simon, the presenter, as well as Orbex Limited, will not accept liability for any loss or damage, including, without limitation, to any loss of profit which may arise directly excuse me, or indirectly from use of or reliance on information I have shared with you today. And the first paragraph here, of course, it's about trading the foreign exchange market, and because it's on margin, it carries a high level of risk and may not be suitable for all investors. Okay, it's very important. So the high degree of leverage can work against you as well as for you. Now, before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. All right, guys. So a little bit about myself here before we get going. I think I've got some questions coming through as well. 6 a.m. Australia, Colin. Is that you, Colin? How are you doing? So you're in Australia and it's 6 a.m. It's mighty early. And I wish you have a very good morning to you, Colin, and hope you enjoy this first part of this gold series, okay, the precious metal series, concentrating or focusing more on gold. All right. Okay, here we go, guys. So a little bit about myself. Head of education here at Orbex, trader and trainer for the past 8 years, and this is my methodology. You can actually read about it, geometric trading patterns. I've sort of mix and match harmonic patterns with chart patterns, and had that experimented with thousands of charts, you know, and it's all manual trading that I do, and I've got a price trade plan as well to take most of my students by the hand to understand how you could actually do a bit of a market analysis in a more balanced approach. Okay, and I like studying and knowing a little bit more about what happens behind the curtains. Okay, geopolitical factors, you know, the plays by banks and hedge funders. So I'm into bank reports as well, but I would like to have that all matched with what I see onto the chart, especially the geometric patterns, okay, or patterns, price patterns. So this is me, and I've begun to go into gold trading myself. Not physical gold too much. I'm collecting them now, but as of last year, more into gold trading onto the Forex platform, and I find it to be really interesting. Of course, volatility and everything else said, it's unlike the other pairs, certain pairs as well, where you would find volatility as well, okay, risk involved and things like that. So there's a lot to learn about gold trading. It has been really fruitful in gold trading, and there's a lot not only to learn but to know about on a day basis, on a day-to-day basis. So I hope you enjoy this certification series on gold, and let's go to the next slide. Oops, give me a second, guys. All right. So here you go. With the first part, I'll just cover a couple of topics here. A little bit on the history, not too much in it. I know there's lots of information on the history. You've got a couple of people covering it at the moment, especially Mike Maloney, who has just, I think, recently launched his book, Gold and Silver. You've also got James Rickards on his latest book, Gold something. I'm not sure. It's a gold book. I've got that book too. It's a very interesting read. So we've got quite a number of latest books being published on not gold per se, but the monetary policy, about talking about the upcoming crash and everything else. But they've got more than 50% of that book would cover not only the history of gold and how gold came about, being involved in monetary policy and things like that. And the most important part of it all is that loads of very famous well-off authors are concentrating on gold as an investment from now on, because they are expecting the crash of the dollar. They're expecting lots of play with the SDRs, monetary policy change and things like that. We'll talk a little bit more about the cycle that is expected in terms of a change of a monetary policy or a new form of monetary policy to come into play, and that's just about time apparently, and you could see that being talked about a lot these days. So we'll talk a little bit about gold. What is gold? Just, you know, a couple of information I'll throw in there, and I'll encourage you guys to ask me questions. Then we'll differentiate between currency and money, because, you know, we need to understand that what we hold in our pocket, if it's whether it's the coins or especially the paper money, whether it's currency, and what's fiat money nowadays, its value as well, and is that real money that we have in our pockets nowadays? Okay, and then we've got the nature of economic cycles, a little bit about that, manias and panics, and the overall impact to the global economy. But I would like to bring you to the past a little bit on what have had happened, a couple of images on previous dollar notes as well, just to give you an idea what they are back then, and what are the notes that you hold today. Okay, these are important things that we need to know. So I'll just take you through. Just before that, I think we've got a bit of some questions going on. Yes, you are right, Chris. Thank you so much for that. The new case for gold, have you guys read that? Have you read that, Chris? I read that, almost finished that book, and I find it to be very interesting. He's got an upcoming book. I think it's Road to Ruins, I think. I've just got the audio version for that. I've got all these other books as well, Currency Wars, Death of Money. They're very interesting read, Jim Rickards. And yes, okay. No problems, Walkas. We will go straight to the point. This is part one, by the way, okay, for your information, for your kind information, Mr. Walkas, because you know, we would like to warm up with what gold is and a couple of other things, and we're still awaiting a couple of people to be in, so they are in now. I'll go straight to the point much more as we go on. Okay, so here we've got a couple of things. I'll just tell you a little bit about gold. Many years ago, of course. I mean, it's been discovered by the Spanish in caves, of course, as far back as the 40,000 BC. Okay, but it is only in 3600 BC that we've got gold being used, being melted. Okay, and then being used as jewelry, and then it carries that value. It's been then seen as having that intrinsic value. Okay, so this is what I would talk a little bit about, the differences between currency and money. So they have already realized that since Egyptian time. Okay, and then when it went to the Greek, what do you call that, conquest time, that's when the mining of gold has been more apparent, much more active as well. Okay, but when it reached 100 BC, during the Roman times, that is when we have actually seen much more activity in subsidizing all government works, government pipes, pipeline, waterworks, everything else using gold. So this is when it has actually sipped into government operation, okay, during the Roman time. So the Greek side of things would be quite, during the Greek times, it would be quite similar to the Egyptian time, where it was regarded as more into the royal family's sort of reserves, and put them up in the pedestal, in the level of being, you know, the ruler of the countries, having that much of gold, and then it's reflected with their what do you call that, jewelry, what they wear and everything else. Okay, but when it gone on to the Roman times, suddenly it sipped into more in the operations of how everything works. But the most important thing that you guys need to know is that it's during the Roman time as well that they have actually used gold to subsidize war. Okay, so this is the biggest thing. When we go on to part two, we will then relate to war in the modern times, on how much gold has actually been used to get the exchange of money, to print the money and everything else, and then you've got your gold have actually reduced to produce that money. So this is how you've got a reduction of gold when they actually spend, when governments spend more on war to gain the power and authority. They spend much more on war, and when you spend on war, you reduce the amount of gold. That is when your debt ceiling rises as well. Okay, so this has actually happened a long time ago, and that was what they have used gold for. So let me just do that. Okay, so rise of gold standard. I mean, you guys have actually heard about gold standard. Gold standards, when you've got your currency, so paper notes, is backed up by gold, by the reserve of gold. Okay, so here itself, you've got something here to read. You've got covering the period from the middle of the 17th century through to the British government's decision to allow the free exchange of gold and presenting documents primarily from the UK. So that relate to the establishment of gold coinage, okay? Coins as the centerpiece of the British financial system. So I just want to bring you to not only the olden civilizations, but also during modern, British times and governments as well. They have regarded gold as a very important element, okay, in the workings of their governmental structure. And then it goes into banking structure, then it goes into monetary structure, monetary policy, financial system. So gold is literally smothered all over the systems, inside all areas of the structure, the pillar of a government. Okay, and the documents contained here address four themes: the legal position of gold coinage, popular views of gold, technologies of gold coinage, and early theoretical evaluations of the gold standard. So you see, they've got a complete structure. Since then, a long time ago, to have a structure that would give them clarity on how they would and how they are going to be using gold in their systems. Okay, so that these are all paperworks, of course, but these are all systems that have actually gone until today. I mean, has grown and expanded until today, using all these things that has been written down about gold. So these are very important areas. So you see, we've got gold everywhere. Okay, so we've got gold everywhere. That is deciding on the whole operations of countries within the global financial system until today. Okay, so what is gold? I mean, gold, as you know, you guys see this very shiny material or element or object, and you know that it's been made with jewelry and all that. I mean, element-wise, it carries the atom number 79. Okay, and it's of course insurance against today's what do you call that, unstable monetary policy, and also the economic condition, the current economics condition. It has been proven many times that it carries that that element of being an insurance against calamities, against almost everything that happens, in the negative side of things. So this is how gold has actually been seen until today. Okay, and it is an anti-complex asset, meaning it's a tangible asset, but what it is not an investment, of course, not a policy, not digital. A lot of people are a bit confused of whether or not it's a commodity. Because it's a tangible asset, it's not a commodity. It's not really classified as commodity. It's way above the level of being a commodity for gold. Okay, gold and silver especially. I think I've got some questions coming about. Yes, hi there. Hi Zaman. Yes, no problems. We can have that sent to you. That's not a problem. All sessions from part 1 until part 4 will be recorded. Yes. And you can easily go onto the live chat and onto Orbex and request for the recorded. Okay, not a problem. That's fine, Zaman. Thank you very much for that. Okay. Happy working to you too, Zaman. Take care. Okay, and let's get on with the next slide. So this is the differences that we need to be quite careful in understanding about what we hold today, our paper money, whether it's currency or is it money. Okay, so this is the differences between currency versus money. Let's look into currencies first. Okay, now the first point itself, first bulleted point, as you guys can see, currency is what most people think money is, as simple as that, because we've been brought into it. Our children, our the next generation and all that, they'll go further and further away in understanding what money, what the differences are between money and currency. So this is something that we can always pass it on to them and make that difference, that differentiation, because they are different. Between what we hold today, it's more currency compared to money. Okay, it is of course a medium of exchange, like in bulleted point number 2. It is a unit of account. Okay, as you know, you got numbers on it. It is portable. You could bring it around easily. It is durable. Now, these are all the classification or characteristics of what currency could be. Okay, it is divisible. Okay, divisible. You can make change out of it. Okay, you can buy something, get change back. All right, it is fungible, interchangeable. Okay, currency is simply paper. Paper money is a tool for trading your time. Okay, that's basically it. Now, I've come across a couple of research materials that says that the paper, especially the dollar that we hold today, it's has been lessened by about 97%. It's close to toilet paper value, the paper dollar that you have, whether it's $50, $100. But it's very different from the paper dollar or bill that we hold years, and if we were to exist long time ago, it would be totally different. And I'll show you that images of previous dollar bills in the past to give you an idea why it is different. Okay, now currency has no intrinsic value, so you need to understand that. Okay, and if we go to money, money has the intrinsic value. Okay, like silver and gold. So we go on to the first bulleted point itself. Again, it's got store of value and maintains its purchasing power over a long period of time. Okay, so I want you to relate that with more silver and gold, because this is crucial to understand the differences. It is a medium of exchange like you have seen in the previous slide. Okay, with currency, that's fine. A unit of account, okay, portable, durable, it's all the same. Okay, divisible, fungible, okay, but in terms of intrinsic value, and then the first point there on maintenance of its purchasing power over a long period of time, that's when it adds on to the characteristics of being money as opposed to currency. All right, okay, so that's it. I mean, we've got quite a number of differences of currency and money that are not really mentioned in academic papers nowadays. We don't actually see that difference being what do you call that, being emphasized more nowadays, and it's good for us to realize that, notice that, and understand that we need to know more about how it is different and to understand that it is different. Okay, the differences between currency and money. So let's go on to the next slide. Oop. Here we go. We've got something interesting here for me to share with you guys. Of course, you guys can look this up on Google. Now here, I would like to just share with you, when you look into previous notes, okay, we're just talking about paper bills long time ago, since 1863, 1922 and all that, right? Most of the time, they're not called bills, okay? If you notice this, a long time ago, they're actually been classified as certificates, okay? I want you to wonder why. I mean, I'll have these, I want you to listen very carefully with what I say, because we'll have these as part of the quiz questions. Okay, now certificates as opposed to bills, as opposed to dollar bills, okay, because certificates is when you could exchange, this was the term used legally, when you can actually exchange something for something. You can exchange that certificate with gold. That was what it meant. For that similar amount that could actually buy you gold, you could literally take that dollar bill. Long time ago, you cannot do that now with the dollar bill that you have, especially the US dollar bill, or any other bills that you have from various countries. It's very rare that you can actually do that anymore. It's no longer, basically. Okay, so that time, because it's backed up by gold, you can bring that across to the counter, to the bank, and change with similar amount of gold. Okay, so here, as you can see, that paper certificate that you could see is weighted, backed up by gold. So that's an 1863 $100 gold certificate. Okay, it's got that eagle image right there perching on the US flag. Okay, it is very rare. Okay, these ones for those who collects and go into collecting these antiquities in the form of US certificates, treasury bills, previous ones and all that. They are very rare. Okay, these were all printed and issued while the Civil War was still being fought. Okay, so Civil War time. So you see, it always has got connection with war times. It has actually started all the time with war, and I want to point that out for you today as well in the next parts, that whatever that we think we cannot see is actually happening. It is still happening as it was before, but we've got many types of war nowadays. So we don't only have the war, the physical one that was fought a long time ago, but we also have currency war, we have trade war, and many other war. But the title of war still stands, and it has a lot to do with gold, about gold and how the central bankers and policymakers are keeping that gold, or the amount of gold, okay, in relation to how they wish to run the country with war and everything else. Okay, so next slide. Let's just go into that. Okay, and this one here, slightly different. I mean, if you compare this one with your current dollar bill, you notice that you don't actually have on the current one all these, how do you call that, orange type, what do you call that, stems. Okay, these stems are to certify these dollar bills as certificates. As you can see right here, the X section here, you don't see that nowadays here. Let me just answer some questions. Lucas, you're asking whether they are recording for the section for one to look. Yes, you will have the because you're a student. Yeah, no problems. I understand that, Lucas. Not a problem. Yes, more like bond. You are right, but not to that extent. It's more a certificate. It's very different from what bonds are and everything else now. I mean, bonds and everything else is just to, if I put this really bluntly, it's just to make you have more debt. It's just to put you in debt. But a certificate is very different, because that time wonder why they have not used the word certificate now, but use the word bond now. You see, so why have they not used the word bond before, or anything else similar to that? Okay, because a certificate, it's different. It's to certify that you have something kept by the US government that you can exchange for it anytime you want. That's when a certificate certifies you for that. Okay, so that's why it's different. So it's very different from bond, actually, Lucas. Okay, yes, all these all these parts from part 1 till part 4 will be recorded. Not to worry. Just simply make your contact via live chat at Orbex and make your request and provide your email address, and they will take care of it. Okay, so here, for example, I want you to look at this here. You've got fine prints that you need to be well aware of in comparison to the dollar note that you hold now. We're talking about the United States dollar note, okay? Here, as you can see, it says this certificate is a legal tender in the amount something here. That's not very clear for myself, but you see the word legal tender. Okay, you don't actually find that now on your bill. And look at this big letters below, $10 in gold coin. Okay, so what that means is you can exchange that certificate. You could buy things with it, but you could use that certificate to go and you could request rightfully of your ownership of $10 in gold coin. Okay, so you see, probably 10 pieces. Okay, so this is basically the difference here from how it was at that time. Now that's 1882. The very earliest 1882 issue are quite rare, as it says here. The later 1882 notes are available. You can tell which type you have based on the signature combination. So you see they've got variations and they have all changed, but just to make that differentiation, before you've got the stamp, you've got a legal tender, you can change these notes with physical gold. Okay, all 1922 examples were signed by Spillman and White. They will cost at least several $100s today. Okay, so this is basically my findings. I've got a couple of people who keep, and they do exchanges as well quite easily, and they do get a couple of $100 out of exchanging these notes today. Okay, so your $10 there will be in exchange of a couple of $100, depending on the rates as well, a couple of other things. Okay, no problem, Lucas. Okay, and let's just move on. Give me a second. This one here, for example, I think this one here is a design of the $100 gold certificate. Again, this was a little bit recent. I would say not recent, but not as far back as the 1880s. 1922 to 1822 issue. Now it shows a portrait of Thomas Hart Benton on the left side, as you can see. Very English-looking man. And the very earliest 1882 issues are quite rare. Okay, the later 1882 notes are available. You can tell which type you have based on the signature combination. So again, it's certificate. Okay, it's what you see and what you can exchange for physical gold. Now here, this one here, it's more recent, 1928. Okay, $100 gold certificate. As you can see, it says here very common. They are the ones that I've got as well. A couple of other people have it. It's quite common. They can be bought for as little as $250, yeah, more or less. The condition and serial number of each note is very important. Now look at this stamp right here. Look at how all the notes that I've showed you have got the word gold, 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 gold. Okay, so that means it's backed by gold. So when it's backed by gold, it's not called fiat currency. Fiat currency, which are currencies now that we have, not money, currencies, paper money and everything else that we have now, does not have that stamp, does not tell you anything about being backed up by anything, and that is because it's not. As simple as that. Okay, so you cannot go onto the account, the bank manager or anybody else, no matter how high a VIP you are, you cannot exchange that for physical gold or physical anything. Okay, physical product you want to buy, yes, but to have that backed up by gold especially, you cannot get that because it doesn't exist anymore. Okay, so this is it. Hence the reason I would like to speak to you about in part 2, in part 3 onwards, especially on why the world may be doing a bit of a shadow gold standard and how and which countries are involved in this shadow play. And this is important for us because this would then give us a bit of a path to understand whether or not it's good timing, or when would it be a better timing, and the opportunities behind grabbing gold as your ideal investment or investing in gold. Okay, so Benjamin Franklin, that guy in the middle here, and he's at the center of the bill, of course. The serial number will always end with the letter A. That's what's been decided, as you can see, ending with A. The overprint is in gold ink. Okay, so there you go. As you can see, it says legal tender again, and you see it using the word certificate as well. Okay, and then right at the very bottom here, $100 in gold. Okay, payable to the bearer on demand, authorized by law. So you see that simple fine print is highly crucial. It gives the power to the bearer or the person who has that note to exchange it with gold. So you see, it's powerful. Okay, so here, this is what we have today. Okay, today's wonderful, totally backed by almost nothing currency, 97+% fiat, which means backed by nothing. So it's almost cost nothing for this paper that we have. Look at how simplified. You don't find anything that says, it says the legal tender, doesn't say a certificate, does not actually give you anything about any information about you being the bearer of it. Okay, so no matter how crispy your note is, how well you've kept it, how fresh it has been printed, and you withdrawing it from the bank doesn't mean that it has more value than what I have just mentioned here. Okay, it's got very close to toilet paper value because it doesn't actually say anything. It's basically paper. That's it. Okay, $100 as you can see down there. No orange stamp, no nothing, no word of gold, of course, no word of silver, no word of copper, no word of any other precious metal. Okay, so no backing up by anything. All right, this is what we have today. All right, this is what we have. So this is your dollar. Now, what's important though, it's a small mention about cycles. It has been researched well, and lots of evidence are talking about how we are now in between the 30th to the 35 years of a cycle. Why I say that is because it's been known and proven that every 30 to 35 years of the economic cycle, political and everything else, the monetary policy changes. So we are, I mean, throughout history, because we're talking about history here in part one, throughout history we have seen changes, okay? We've actually seen changes taking place in the monetary policy. A new monetary policy comes into play every 30 to 35 years, and we are exactly sitting at that time range. So whether or not it will happen, we don't know that 100%, but a possibility of it happening, yes. Probability of it, yes, because if we're looking back into the pattern, the cycle of history, this is basically what happens. Now, we've got a nice sort of cycle that you can actually see, and I've just put the word gold in between stock market and commodity market. But the cycle that I'm talking about, when gold is in its peak timing, ripe for investors, are usually the end of the stock market cycle and the beginning of the commodity market cycle. So that's where you've got that valley of investors awaiting for time to invest in gold. So as you can see, if you mirror that downwards, you could see the words deflation, inflation, and deflation again. Okay, so in other words, throughout history, all throughout the cycle of deflation, inflation, and you've got stagflation and everything else nowadays as well, gold has always been proven to be ideal in terms of investment. Okay, the reason for the low and lower price of gold nowadays and being pushed down has got two reasons. One would be very simply the manipulation of its prices. Okay, we'll talk that a lot more in the subsequent part. And secondly, we've got overloaded of the paper money out there. So you've got more paper money as opposed to physical gold. Okay, so rumors has it that we've got banks going into problems. You heard about Deutsche Bank and everything else. There's a slight truth about it because we've got evidence about it that when huge hedge funders and all that, they demand the physical gold, the bank couldn't actually provide them with the physical gold that they have requested. So hence everything went topsy-turvy till then, because that was what happened in the past as well. Okay, we had President Nixon, for example, decided to just cut off all this backed up by gold currencies, okay, to cut the gold standards altogether out of it, when we had the President Charlie Gould from France demanding their physical gold from the US. Okay, so the US seen that as a threat that other countries might follow through, so immediately they had the gold standard taken off. Okay, that you had this new play of fiat currency. I think I've got some questions here. I'm sorry to keep you guys waiting there. Okay, Gus Gilbanks, how are you doing? Most currencies then described as fiat? Yes, almost all currencies that we have now in this modern world, in modern countries, in all countries basically, modern or not, doesn't matter, are fiat currencies. If you guys want to read about how fiat currency gets so fiat, okay, no value at all, look up what do you call that, information on the Zimbabwean currency. In Zimbabwe, how could you actually manage to hold trillions of dollars in your hand just to buy a Coca-Cola, for example, in Zimbabwe? How did it end up there? I mean, that would be a very good example to do your research on. I will talk about that much more in part 3, I think, either in part 2 or part 3, but we'll cover that too, of fiat currencies, because we would need to know about superpowers' play on fiat currencies in order for us to know whether they are using gold to back that up, and how would that impact which currencies, so we can then do a bit of a correlation between the gold that they have in reserve as well as their currencies. Okay, because we have got the yuan now, we've got the IMF issuing SDR, it's called special drawing rights, and then we've also got the yuan now inside the SDRs, but we've also got lots of buying of gold by the Chinese, so they are playing a bit of a different game there in hedging the US Treasury. So we want to talk a lot about that, but how can that impact your trades for the US dollar as well as the gold? Now, this is where we want to get at by part 4. So part 4 will come up with a strategy in understanding, in analyzing the market practically onto your MT4 platform, look into geometric patterns as well to coincide with that. But now we want to gather information, but we would like to dissect this information and get proper information that would help us with our trading decision by the end, by the last part of this series, which is part 4. Okay, so yes, in Mozambique Canal they have very nice sharks. Okay, they go there for reproduction. Very nice drawing place. Okay, but no point with presentation. I see. Okay, thanks for your opinion there, AI. I appreciate that. That's good. I mean, for those who would like to wonder about, places to visit and all that, I mean, it's probably best for us to also look into how we can actually, make some money with the trend. So the trend now, as most of the investors and serious traders are looking into understanding whether or not we should be trading gold. Hence the reason for this 4-part series on precious metal, because we're expecting, I myself, as a trader, expecting some huge moves on various precious metal, and that is what we would like to talk about in part 4, but we would like to start with a good base on understanding fiat currencies. Very, very important. Okay, and fiat is what the governments and countries are gearing towards too. So everybody else, most countries and government, they would want to have the value of currencies to be reduced, okay, because fiat currencies are designed to have a reduced value, and hence the reason most of us are listening to more and more countries adopting the negative interest rate. Now, the negative interest rate has got nothing to do with making things easier or better for the users like you and me, or the consumers, or the bank account holders. It's got to do with them. It's got to do with them holding gold. So remember this well, because I'm going to have that in the quiz question as well, is when a country adopts the negative interest rate, when the rates are in negative territory, that gives their gold reserve of the country higher than the currency value. So if a country reduces their currency value, then the gold value inside their reserve bank, their central banks, rises in value, okay, because we have the interest or the value of gold to be zero, okay, because it's an anti-complex asset. So because of its nature, of the nature of it, it has got no negative, positive, it's at zero. but 0 is still greater than negatives, you see. So the more negative the banks pulls down their currency, the bigger that value of the gold reserves that they have. So at the end of the day, who's winning? The government, the central bankers would be winning at the end of the day because they've got gold at a higher value than their currencies. You see? So you are having the currencies that are of paper, toilet paper value, but them as governments would actually hold gold of a higher value. And then they use that gold to spend on however they want, whether it's war or military or anything else in exchange. But we want to talk about that on how which countries are being in the play of a currency war as well, and that would then give us a bit of a path in understanding which currencies would look into more dips because they would like to reduce their currencies to the negative territory. Okay, and whether or not we could see much more of a gold trading time. All right, okay, that's it. I know it's probably a bit more theoretical on this one here on the first part. I wouldn't want you guys to go straight into facts and very trading oriented ones. I would like to take it slow and easy, but from second part onwards, I'll be sharing with you very, very practical, to the minute, to updated information in the economy for now that could actually make you understand trends, okay? Certain trends with certain countries, a bit of a measure on geopolitical factors as well that would help you understand what's the interplay between certain countries trading the US treasuries and what do they get out of it and how do they actually, you know, transfer their wealths as well, so you can then understand not only the interplay between the countries but the correlation of certain major currencies excuse me, and with gold, so you could then do the negative or positive correlation with that. Okay, let's just carry on here. Now as you can see, gold, I've written it there, it's got cycles, okay, and this is its cycle. So in other words, in summary, whether it's inflationary or deflationary, gold always wins. Okay, gold is just the nature of gold, whereby its interplay is making it benefiting in any situation, whether it's deflation or inflation. Okay, so here you go. Excuse me. All right, let's go on that one. Now, just would like to share with you a simple image here on gold prices. It's a 100-year historical chart. Okay, it's gold prices per ounce, basically from 1915 onwards. Okay, it's deflated as well using the using Consumer Price Index or CPI. Okay, so you can check your chart live on Orbex to know the prices now, but this gives you an idea of where it started from the bottom under $400 and look at how it has actually played out. Okay, all the way up there. So this current price of gold as of November 29th, that was yesterday, day before yesterday, then you've got it at that price there. But this is just a visual sort of guide to give you an idea of how much it has appreciated over the years from historical times. Okay, so this is how it is. Now this is on the Orbex trading platform. If you go onto your weekly or monthly chart, it gives you a bit of an idea. Right here, as you can see, the dotted red line points at $251 at that bottom there. That's just in 1998 time. Okay, and then it has peaked all the way up right there. That's about 2010, I think, roughly at 1917. So look at that huge move upwards. We'll be talking a lot more onto the charts, and I'll be sharing with you on trade ideas on gold especially and silver using geometrical what do you call that, techniques, geometric patterns techniques, and then we could sum it all up. So once we reach the part 2 and part 3, I'll be giving you more hints of the government monetary policy play to give you a hint of geopolitical factors, fundamentals, and news, so you can then marry that up with technical techniques that I will share with you in part 4. So part 4 especially will be a market analysis session where we will go straight onto the Orbex trading platform, and we'll start analyzing the market based on what I have shared in part 3, in part 2 and part 3 in terms of the workings on geopolitics and everything else that I've mentioned earlier on. Okay, so let's look into this. Okay, good day, Kim. How are you doing? You just started joining. Okay, that's not a problem. We'll have this recorded anyway, so don't worry. You can always get to the Orbex live chat requests for the recordings, and they will guide you through on what the requirements are to get the recordings anyway for all of you. So you'll be fine. Okay. Yes, not just yet YouTube page, but for the certification course, it will be sent out to you guys that have got a live account with Orbex, for sure, not a problem. But then your certificate will be sent out once you've passed the 20 questions or so that I will I would be sending out. Yeah. Okay. Hope you're doing well, Kim. It's been some time if not heard from you. Okay, it's good. Hope you're doing well. All right, so that's basically it. And you've got the 1917 there as your price right at the peak. Now we're talking about today. Today, roughly, it's probably about an hour, 2 hours ago, it was at 1165. Okay, as a price there. It has bottomed before that, but that bottom was at 1039. As you can see, it's more than halfway of this, so it's got loads of appreciative value. So whether or not that down move now that we see here, would it overtake that previous buying territory? This is the previous buying territory right there above 1039. So we want to look into it further later on. I will share with you in part 3 on views by experts, and then we will make that as a sort of a panel type discussion in challenging those views, and then we will then do our own analysis based on geometric patterns as well, technical side of it. So we'll teach you some basic geometric patterns techniques that will allow you to do some analysis on any instruments basically, but we want to focus more on to precious metals, especially gold and silver. Okay, all right, let's just do that. Okay, here we go. We've got something here, just give you a bit of a numbers thing since the 2008 crisis. As you can see, we've got just more and more growth, 36% plus growth, and then after that bottom here, we've got another 46.6 plus percent growth. So we have got financial crisis as a keyword, as keywords, and then we've got the after effect of it would be appreciation of gold. So that has always been mirrored that way. Okay, so as I've mentioned earlier on, we've got deflationary, stagnation, or inflationary situation. Gold has always been proven, I mean, throughout history to have gained in these tough times. Okay, so this is it. And are we going through another tough time or already into one, and whether or not gold will still shine? That's what we want to get at in this certification program. So we would be doing a sort of a market analysis, marrying fundamentals and technicals. Okay, let's see. We've got some more. Ashish, how are you doing, Ashish? Ashish is saying that he has entered a short at 1166. Okay, we'll go into a lot of technical with geometric patterns and some trade ideas as well from part 3 onwards. But just looking at your question here, you have entered a short, you say, at 1166.
and it has moved to 1172. You are right. What do I suggest? Okay, perhaps we'll take a very quick peek onto the platform just in about 5 minutes or so, Ashish. Okay, if you could stay with me, we can go into there, and I'll just give you my take on it very quickly. Okay, of course we'll do more of an analysis on geometric traits as well in the upcoming parts. Okay, but yes, no harm sharing my views on what we think about gold. Okay, all right, let's I'll just carry on. Okay, so that's basically a very short presentation on gold. I know I'll pack the more solid information from part 2 onwards that will get things a bit more rolling, but we will go into analyzing. So coming back to your question there, Ashish, let's just go into the chart at the moment. I'll be happy to do that, and let's see. Oh, because we've not planned to go into the chart there, so I've got my trading platform open in the other laptop, so I'll just have that. Give me a minute. I'll just have the trading platform opened, Orbex trading platform, and we'll just have a sneak peek onto gold. So your it's 1162. You said you went onto a short on that. Now. The thing is that it's important for us to also look into various pairs, or I would say instruments. I look into the USD index. It's not a tradable instrument, but it is an instrument that would definitely. Give me a second, guys. I'll just clear off all these tools here. Okay, so let's look into gold. So we've got gold right there. I'll give you a bit of an idea of what I see. We've got a couple of patterns that have actually emerged, Ashish, with the gold, okay? And you said that you've shorted it, and so you are wondering, it has actually gone up, so you're wondering whether or not you should remain, I guess, in your trade, and wonder whether or not it will be a bigger fall for gold. Now, the thing about gold is that we have had a bit of a pattern here. We call it like a Z-like pattern, as you can see in blue: A, B, okay, C, and then D. It has gone beyond that area and when through or pierced through that possible rebound zone here. You see the PRZ area, it didn't rebound or gone up, so it went through it. So because it went through it, it's got more sort of selling power, because what's happening at this moment of time is that we've got loads of manipulation of gold prices, okay, by whom we will discuss that a lot more in the subsequent parts of this certification course. So due to that, and due to the overflow of paper gold still going on and on, you're looking into more fall of the gold prices. So yes, it's got a bit more on a little bit more fall expected. It was already expected with a pattern here called the bearish ABCD. So I will just do that pattern for you here. I mean, I'll draw out that pattern here. As you can see from there, if you put it all the way down here and you take that all the way from here, okay, not at the peak here, because that is not the peak, that just came out of one of the candles here, so it's not from the top. Okay, so the top is here. Now if you take that AB's length equals the CD here, as you can see, this hits exactly on the dot on the price now. Okay, so what does that mean? That means that if it does actually go crosses this area here, that means it's got a bit more room to the downside. Hence I said that it's got more room, I think, or I feel, to the downside based on what it has done here. Okay, so AB is equals CD. Now if I take that across, I'll just mark that now here. Let's say this is where I've projected it to come down to, but it's going down lower. All right, now once we've used the AB equals CD, then what you do next is you find out another way of finding that projection by pulling your Fibonacci. So if you pull a Fibonacci right there, this will be covered with you guys in part 4 in doing the analysis based on geometric traits, and I'll share with you guys the Fibonacci ratios and things like that. But we'll start having an idea from part 2 onwards, so that it's not too much to absorb all the technicalities in part 4. So we'll get that a bit more smoothen up to induce that into your early parts of your learning from part 2 onwards. Okay, so if I pull it from the very top to this area here, the corrective area here, which was very obvious correction there, then you'll see that that top area here, it's about 61.8. Okay, so it landed at 61.8. So if it landed at the 61.8% retracement area, then the extension area could be expected to be at about 1.618. So if you pull that corrective area here, then you start looking for 1.618, and that's the other area that you could expect it to reach, okay, for your take profit area and things like that. But the thing was, in both ways, from pulling the AB equals CD as well as the Fibonacci, got stuck at this area here, okay, but as you see, prices went through it and past it. So because it went through it, past it, the 1.618 is around here, right, and it went through it. Okay, so that gives us an idea that it's got more room to the downside for gold, but you would need to also look into the US dollar strength, because what's important in gold trading is that gold don't actually go up and down. Okay, it is reactive to what's going on in the States and the dollar. Okay, so you would need to also look into the USD index. As I've mentioned, it is not a tradable pair. USD index, you can get it available on the Orbex platform here as well. If you go onto the market watch, you click onto your market watch, you see that it's not highlighted USD index right there. Okay, so your USD dollar index is USD in comparison with 6 other pairs, a basket of 6 other currencies. So that gives you the strength or the weakness of the dollar. So you would need to analyze the USD index as well and pull out all other pairs with the USD to get an idea of the USD strength. So if you've got more room for the USD to go up, then you've got more room for the gold to go down. Okay, so that's as simple as it gets. All right, let's see. Okay, that's very interesting. Colin, you are more into the candlesticks as well. That's good. I'm not really much of a candlestick. I use candlesticks, but not per se the candlestick patterns itself. But that's a very interesting thing about the hammer. I am not really into it so much, but if the hammer does actually give you an idea of a reversal, then using the pattern as well, if it does give you that reversal sort of hint, then you can always match your technique of using candlesticks with the patterns here. Okay, because if we zoom in a little bit, this is on a daily chart though, so as you can see, I think that's what you're talking about there on the hammer. So does that hammer mean that it would signal a reversal then for you, Colin? Okay, brilliant. Okay, brilliant. Okay, that may be it. That may be a potential there, because if you pull it all the way across, if I simply give me a second and clear out everything here to give you a bit of an idea, you can look into the what do you call that, shorter time frame as well. I mean, that whole peak area here, you see, if you take that all the way across, okay, and you take that all the way down there, then that, as I've mentioned, is really close to that area there. So let's continue drawing the pattern itself all the way down there, okay, and double click that all the way upwards, and then you've got that as well all the way up. So that is more or less the ABCD type pattern, okay, a bearish one. But the thing I would like to share with you guys is that when you see that, and then you've got a preceding, the move before that is a big move upwards here, so that gives us a hint of an M-like pattern. So the M-like pattern further confirms that there could be a probability of a reversal there as well, you see. So what you can then do is grab this all the way up here and look for your 61.8 and 78.6. So there we go. If I pull that all the way down up there and starting from here, just simply mark the 61.8, and as you can see, it's really close to the area now too. So that again confirms a probable reversal. Okay, but if I pull that one from X here to C, I look for my 61.8 again. The 61.8 is further down here. Okay, so that then gives me another probability in saying that if at all prices comes down a little bit more further down, it may try to hit this area here of 1146.48, because that's one of the criteria of an M-like pattern where I pull my X Fibonacci to the C. So I pull it, my X basically is here, and my A, B, C, D as usual is there. Okay, so you pull your Fibonacci from X to A and then X to C, and you look for both points. You look for the 61.8 and the 78.6, okay, and make that zone out. So that gives me an idea of a probable possibility coming down to 1146 if at all the dollar strength persists. So if you've got more dollar strength, then you're looking at much more room to fall to that area there. Okay, so hence the reason you want to look into the USD index like that. So this is what's going on with the USD index. We've got a bit of a you've got a bit of a W-like pattern that is just about to end there, or have actually ended. So now I'm expecting a fall there on the what do you call that? I think this is the daily chart, or not? Yes, I think so. The daily chart. So this sort of mirrors with what I see as what you guys are looking at, a possibility of a reversal coming really soon for gold, because we've got that reversal here for the USD index. Okay, so I hope that was quite clear for you guys. All right. Yes, you are right. Colin, you've got an interesting point there. I think you're looking at the candle side of it, give you a bit of a hint, a better, clearer picture as well of reversals, especially. I think not sure whether you'll agree with me, but that candle there as well on the USD index is sort of a how do you call that? Not only a reversal candle, yeah, a reversal type candle, but an exhausting type candle as well. And I see a lot of dominant play by the bearish candles coming into, and that's basically it. So I see that we've got a nice Fibonacci ratio that has rested on as well on the USD index. So that does give us more confirmation. So the more confirmation that you have in various forms, like yourself, Colin, using the candlesticks, I use the Fibonacci, and then you've got the other techniques, you guys who are using Ichimoku and various others. If you sort of combine that, and also don't forget the fundamental aspects of things, and I think it should actually give you a clearer picture of what's going on. Okay, all right. All right. Hi. Yes, there's no noise, mainly because it's 10:15 at night in the office here at Orbex. So I'm literally the only one with the customer support. The customer support is there, and it's just me. So there's nobody else in the company. So it's really quiet, and I made sure that I am in the conference room, so it is much more quiet. It's very peaceful today. It's a bit of a rainy day here in Cyprus. It's heavy rains all day through. Rain never stopped today in Limassol, Cyprus. It's getting cooler as well. Yeah, that's basically it on the weather side of things. Okay, yeah, that's true. Is it better for you guys as well at this time? If it is, then I'll probably have more sessions this time around compared to the other times. Only for Asia, maybe it's a little bit too late, but I'm planning to have more sessions. I'll inform you guys about it on Telegram, and probably have it more this time, as well as a second slot of 2 slots, so that it covers globally better. Okay. 2 a.m. Ashish. Wow. In where are you now, Ashish? In India, I would guess, or where in Asia? Yeah. Nepal. Oh, very good. Okay. Good, good, good. Brilliant. I like Nepali food a lot. Actually, I've got Nepali friends and the Gurkhas in Singapore. So yes, brilliant. I only know one word, if I can say that now. It's Mo Timilai Maya Garchu, which means I love you, okay? I don't mean it in a bad way, but love is love, right? So I just thought of saying that. Brilliant, good. Okay, good. So yes, I think we've got, hi there Thabang, how you doing? From South Africa, brilliant, sharp, sharp. How's things? Yes, not a problem, you can shoot. You've got a question here about silver. Silver is a bit expensive, you say, to trade. Do you think it's forming a good M pattern for a buy? Please see the link. Okay. Now this link here, let's see. Okay, I've got a bit of a problem with going into an external link from this platform. If you don't mind, Thabang, I'll go on to the silver chart. Okay, give me a second. Let's just do that if you don't mind. We will go into the silver chart first. If you could tell me the M pattern sort of potentially, excuse me, on the daily chart, was it, or was it on the hourly chart? Pardon me, I didn't actually see the time frame that you've typed in. Daily chart. Okay, let's look very quickly into the daily chart for silver right here. You may have a bit of a point there with an M-like pattern. Okay, but let me just go through the 1 hour chart as well and the 4 hour chart right there. It looks like more play to the downside, right? I mean, we've definitely got more play to the downside. Daily chart. Give me a second. Let's see, tools. Okay, so on the 4 hour itself, it looks to me quite clear on an ABCD right here, A, B, C, D. You just want to know how far more would it actually have got to go downwards. You've got a point about your M-like pattern. Also, it's good to measure that ABCD too. Okay, and look into it in the point of waves as well, because you've got all these waves really clear, and you can use the theory of Elliott wave a little bit, just a theory of it, just to give you a bit of an idea what's going on. Hi there, Mohammed Ilyas. How are you doing? Yes, it would be appreciated if you conduct at somewhere between 3 to 5 GMT. 3 to 5 GMT is 5 o'clock to 7 o'clock. Okay, okay, I'll consider that definitely. I'm looking, me personally as a trainer, I'm looking for time slots that would be, of benefit. So I will be planning very soon to have the sessions, training sessions that are, would fit majority of you guys traders around the world. So perhaps 2 or 3 slots in a day would probably be ideal. So that is definitely in the pipeline. I will plan that for sure, not a problem at all. Okay, because at this time I'm doing only 1 slot a day, so I could definitely up the ante a little bit and increase my number of slots per day to 3 at least. So that would be ideal. So at least I get that rough idea of time. I do appreciate that a lot, and I'll have that plan for sure. Thank you guys. Okay, so moving average. That's a hi Jose Garcia. Jose, ¿cómo estás? The three lines that I use are the 50, 100, and 200 exponential moving average. They are all applied on close. Okay, 50, 100, 200. Yes. Muhammad Asim has got a nice question here. How is the relationship between oil and gold? Okay, that's a very good question. Now, I want to tell you guys that from experiments, correlation don't actually happen all the time the same way. Okay, there are times that things just go haywire, so there's no exact correlation, for example, telling you that okay, gold and oil, they go up together, or gold and oil, one goes up and one goes down. Yes, there are times that they do that, but the problem with using that as a theory to help you trade, it's quite dangerous. You know why? Because they seem to change as and when they want to. So they can actually, for this month or for this whole year, be correlated positively and go up all the same, and then anytime they'll change. And when that time they change and just go split their whole correlation, they never tell you that. So that's why it's really dangerous, okay, with that. But the relationship, gold's relationship, I'll put it this way for you, Mr. Muhammad Asim. It's better to look at correlation, not gold and oil so much, okay? Look at gold with China, gold with yuan and the dollar. That's a better correlation, okay? Because quite a number of traders, what they have done recently, which didn't really work quite well, as I have noticed, is to correlate gold in Australia. Of course, there were one. I mean, they are one of the producers of gold, but it's more because now with all the things that have changed in China, there's a lot of games inside. So what happens is that the Chinese monetary policy and politics and GDP and everything actually mirrors what goes on in the US much more than any other country. Okay, so the triangle for you to build is gold, yuan, US dollar. Okay, if you want a square correlation, then you can say yuan's position with gold, with US dollar, and the Norwegian krona as well. Okay, the Norwegian krona, USD NOK, yeah, is correlated 90+% with the dollar because it has correlation with oil, the Norwegian krona. Okay, so the Norwegian krona in Norway, yeah, they are governed a lot with the price of oil because they have got a lot of correlation with what is produced in the North Sea in Scotland. So their involvement with the oil in the North Sea. I was living in Aberdeen in Scotland, so I'm quite into the oil and gas industry myself previously, and now, you know, having friends in it. So you've got the WTI, yeah, World Trade, WTI Texas instrument, yeah, that's the oil. Then you've got Brent, but Brent is stored up in Scotland. Okay, the WTI is stored up in Texas. So these are different. So when you come to the NOK, Norwegian krona, is connected a lot with oil, much more. So you want to look into Norwegian economy, Norwegian correlation with oil, you get a better thing. And then you want to look into the Saudi Arabia, what do you call the OPEC and all that. That's more geopolitical, okay? But then you've got somebody who wants to pull the price down and control everything and make more profit, is Putin in Russia. So Russia has got that as well, okay? So this is what you want to understand much more, is the correlation now has actually changed into the bigger picture. Bigger power is actually controlling, because you see US sanctions on Iran has prevented Iran to sell its oil directly to China. So it has to use a middleman, Russia, to sell it to China. But the funny part of it all is that China is buying the oil in Swiss francs, not in yuan. So you need to understand that the correlation has all changed now with a lot of political play, and we will talk a lot about it in relation to precious metal and gold. Okay, guys? All right, hope that was clear for you, Mr. Muhammad Asim. I will be sharing a lot more with you guys in relation to precious metal and the whole interplay with all these things that are going on from second part onwards. So please look forward to that, because there's a lot of things that I need to share with you guys that would be practical for your trade in understanding how to path the trend, because all these things are building the trend. We've got a new president, we've got the post-Brexit now, and a lot of expectations of a lot of new policies, and everything would actually change, you see. So all this would come up to a different play of currencies and precious metal and trends. So we've got a good opportunities, some good opportunities ahead, but we need to play it right in understanding what exactly is going on in order for us to predict or make our forecast better. Okay? All right. No problem. No problem at all, Mr. Muhammad Asim. Okay. Alexander, a very, very straightforward question. Okay. What do I recommend now? I would recommend at this point of time not to do too straight a sell, too straight a buy on the precious metal, okay? Because there are loads of manipulation going on in pulling the price down. So if you were to write the trend, short-term trend for now is to the downside, but it is expected for a rise. So we want to time the rise up for the future, for the near future, for the upside. So gold, as you know, I mean, we have looked into the chart earlier on, as I have mentioned. There is some room down, okay? You've got that going on now. So if at all, I can tell you this, if at all you've got more strength of the dollar, then that will pull the price of gold to this area here at roughly 1146 to 1150 area. So the 1150 is a psychological level area, okay? That is somewhere in the middle here. Okay, so be careful of that value as well, that area. So here prices looks like it's dominated by some bears right there, but you know, with lots of other theories as well, with the candlesticks, with my geometric sort of pattern here as well, it is signaling some buying opportunity very soon. But we would need for prices to go above this area 1175 and above first for us to get more idea to the upside. So it's not a matter of buy or sell, it's a matter of when it's best. So looking at price action, maybe for the XAU, USD or gold, you should be best to wait until it rises up 1175 and above for the buy opportunity. But if it goes lower than 1170 all the way down to 1165 onwards downwards, then you're looking at more selling pressure. But this is the zone of a turnaround area for gold. Okay. All right, Alexander, not a problem at all. Okay, Nazim, how are you doing? Nazim says there is a report I read which predicts gold price to rise to 5,000. Okay, yes. Dollars, do you think that with the currency wars this is possible? To be very honest with you, Nazim, there's a lot of possibility of price rise for gold. Whether or not it'll go up to the level of 5,000 or not, we never know. But the probabilities of it rising, yes, due to currency wars. Not only that, because of geopolitical problems and issues all around the globe. Okay, so all around the globe issues are pushing between inflation and deflation, as well as stagnation. But both deflation and inflation, gold always win in this situation. But now we are living in a very, very geopolitical world. As you know, we've got price of gold manipulated. We've got lots of paper gold going on. We've got manipulation by superpowers on the price of gold, and then we've also got geopolitical factors in wanting the islands and things like that for political authority play, power play. So all these will then push the demand for the safe haven value of gold again. But now what is pulling prices down is the manipulation of gold through paper gold. Okay, so that's where the problem arises. But probability, yes, due to what is expected, it could rise, but to rise exactly to that price, I am not sure myself. Hence the reason we as traders, and myself as a geometric trader myself, we trade in stages, and we look for patterns by pattern in small time frame, medium as well as long, and not to look into it too far up there and place your order and go big and wait for it to happen, because then it's overly a risky time to do that. So we would need to trade in stages as our form of new strategy, is to trade in stages, and hence the reason I like to combine the play of patterns with the play of what's going on, news from time to time. As you guys know, news changes just like that. So to listen to something and go bullish or bearish just from that news and then leave your trade open and go for long term, it's a very risky play for this time of the market. Okay, so trading in stages in between short to medium would probably be better than your long term at this very moment of time, looking at the ending of the year as well, looking at huge news, huge changes have actually happened. We've got Trump as president as well. It's got a lot of consequences of that. You know, we've got all this trade war happening, not only currency war. So we're looking at all this happening too. Okay, all right. Hope that's clear for you, Nazim. Currency war, we've got the NIRP to be, you know, one of the tools as well for this currency war. One of the spark plug for the currency war is them using the NIRP. Okay, because when you have one country reducing the amount, then you've got the currency war going on. The flame of the currency war gets even bigger. Okay, so that is where the problem is. Now we have got yuan, we've got Chinese. They have to mirror the way it works now. They have to mirror the amount of yuan printed as well. So you see, this is a big problem, meaning behind the curtains, the relationship between China and US is very close, and they are dependent on each other, because China is absorbing the debt, the national debt of the United States, by buying all the US treasuries as well. So the problem is that if the States is printing more money, China has to print more as well. So you see, the more they print, you've got now two superpowers printing it. So you imagine the power of war going on there itself on the currency war is really huge. So that's what goes on, and then you've got more countries now going through that. Okay, so we need to understand the mechanics of that, so we understand the trend. When we understand the trend, we've got a better play on predicting and forecasting the markets. Okay guys, Nazim, I hope that is clear for you. We'll cover a lot more on that, especially in the area of gold and silver for the upcoming parts. Okay, thank you too, Nazim. All right guys, I think we've extended further here. Any more questions at all? If not, I think we could make a sort of exit through this part one. But of course, if you guys have got questions, if not, I'll wrap up here, and then they'll see you in part two. Okay, and I think that is on the 8th of December. Okay, same time, and that is when we will go into the meat to the bones, meat of the bone, for this whole certification program, looking into now what's going on in relation to gold, and then we will interplay between that and what we see on the chart into what's going on, and we keep doing that part 3 as well as part 4 in order for us to then come up with a strategy for a trade idea for gold and silver, okay, especially. All right, let's see, we've got questions or not. We have got Lepanga Motown, how are you doing? Lepanga is asking me, hi Kenny, is it possible to value currencies via gold instead of US index only? Is it possible to value currencies via gold? Okay, you see the dominant play of price of gold is the States. It's the US dollar, the greenback. Okay, that's the value play of it. That is the biggest chunk of what controls the gold price market. Okay, so the index, US index, is to give you an idea of the dollar strength. But what you could do extra is to look into the economic play, to look into the status of economy in US. Are they into a recession? Are they into inflation? Are they into deflation? You know, this is the most important thing, because this will then give us a hint of what monetary policy, FOMC and all that would be actually doing. Okay, then you could see whether or not there's more room for the dollar to go up or down. Only then you will get a better idea of gold's, what do you call that, position in the market, to predict gold's position. So it's a better play to look into US. You can also do this one thing by opening all your pairs that revolves the dollar and give you an idea, and then look at USD index too. But it is highly important for you to cluster at least 3 time frames to look into whether all 3 time frames are matching in terms of the trend. So I personally like using the 1 hour chart, 4 hour chart, and the daily chart. Let's say I look onto the USD index, I look at the 1 hour chart, does it match with the 4 hour chart? If the 1 hour chart has got a strong uptrend, a nice angle upwards, a very steep angle pointing up to the sky, 4 hours does the same thing, daily does the same thing, then I am more biased to the upside. If I've got my 1 hour doesn't match with my 4, and then my daily gives me another story, then it is just telling me that I just gotta wait until they settle down. They're not settled down, I just don't go in, because you don't want to put your finger into a spinning washing machine. Okay, you want things to be clearer, then it would be a better idea for you to then write that trend that is strong or would get stronger. Okay, because there's a difference between a strong trend and a strengthening trend. Okay, a lot of people go in a strong trend, but then they don't realize that strong trend may have gone weaker or about to weaken. But if you go into a strengthening trend, then that trend would then strengthen further. You've got room for you to ride that trend, as opposed to riding a trend that would have a corrective move very soon around the corner. That's where you get caught out. Okay? All right. Okay, Lepaga, hope that has been clear for you. No problem, Michael. How are you doing, Michael? Good. Mohammed, thank you too, Mr. Mohammed. Appreciate your kind comments. Thank you. I hope you join me in the second part, third and fourth, because it's going to be much more of an informative ride for you. I'm very sure of that. Okay, and because we will be marrying between fundamentals, important, very important information for you guys, especially on gold, because you got silver always shadowing gold anyway. Okay, so I'm not really worried about looking into forecasting silver, because you cannot get silver without mining gold and copper. Okay, you cannot mine silver. All right, so that's the nature of it. Okay, so you need to go and mine gold and copper and all that, then that little remains, that's where you get your silver. So actually by right, silver's value is many times much more than gold actually. So silver works like this. It'll follow very slowly behind gold's trend. If gold goes up and up, it goes up a little bit. Okay, but if gold could actually go up much more, then silver will overtake that and go even higher, and then they'll go up together. But then the value of the rise would always favor silver many times over gold. Okay, that's basically it. All right, brilliant. So a big thank you to you guys too. Thank you, Mohammed, for your kind comments once again. I would like to wrap up here, and it's already almost 11. There's 10:30, 10:35 now here, so I need to wrap up and go home. So I will do that right away. And like I've mentioned, go onto the live chat, Orbex, mention and request for the recordings, and I'll have that sent to you guys, and we shall get in touch. And I would like to say a big thank you for you guys. Thank you for attending part 1 of today's certification series. Join me again from the second part onwards, and you'll get more information, and there's a lot to share and there's a lot to talk about as well. Okay, guys? All right. Thank you once more. Have a very good evening. Good night to you guys all across the globe, and we shall then meet very, very soon again. Okay, guys? Bye-bye. Bye for now.